Welcome back to Investing Talk Podcast. Today we're tackling a big one. Is Robinhood Markets a good time to buy now? We've got, well, quite a bit to unpack. Recent news, company fundamentals, what might be coming down the pike. We're really going to explore if this company can bridge that gap, from its disruptive meme stock past to maybe becoming a more established finance player. Before we really get into it, if you find these discussions helpful, maybe hit that like button, subscribe to the channel, and leave us a comment. Oh, and definitely let us know if there's a company you want us to look into next. Just drop the name below. Okay, so let's dig in. We just got some pretty major news about Robinhood Markets, the platform everyone was talking about during the pandemic. They've made a pretty significant leap.
Indeed. It's a company that's been, well, fascinating to watch in modern finance. And these latest developments, they absolutely warrant a closer look if you're considering it as an investment.
Yeah.
It is a complex picture, though. As always, really. There's some exciting opportunities, definitely. But also some notable risks we need to weigh up.
Right. And here's where it gets really interesting. Potentially game-changing for Robinhood. Just announced on September 7th, 2025, Robinhood Markets is set to join the S&P 500 index. That's not just, a nice headline. It's a huge deal. It officially happens September 22nd, 2025. And it's not just Robinhood joining. Applevin and MCore Group are going in at the same time. They're replacing MarketAxess Holdings, Caesars Entertainment, and Enphase Energy. And the market reaction, pretty immediate, pretty dramatic, actually. Robinhood shares jumped over 7% in after-hours trading right after the news broke.
Wow.
Yeah, Applevin was up 7.5%, MCore gained about 2.5%. And just as a quick reminder, Robinhood, founded back in 2013 by Vlad Tenev and Baiju Butt, famous for commission-free trading, and yeah, that central role in the whole meme stock thing.
What's really fascinating here, it may be a subtle but important shift for Robinhood, is what this S&P 500 inclusion truly signifies. More than just immediate liquidity or visibility,
Right.
It's not just a trophy. It kind of forces a company to grow up a bit, to think less like a pure disruptor and more like a pillar of the financial system. This could unlock huge amounts of capital.
Right.
Think about all the index funds, the ETFs, pension funds that track the S&P 500.
They just have to buy it now.
Exactly.
Yeah.
They'll automatically add Robinhood shares. But it also brings a different kind of spotlight, more scrutiny, a demand for consistent performance, maybe even, a slight tempering of that aggressive innovation streak they've had. It definitely validates their market presence. And it reflects how retail trading, and especially crypto adoption, are fundamentally reshaping finance.
That's a good point about crypto.
Yeah, if you look at the bigger picture, Robinhood's joining other crypto-focused companies already in the index, like Coinbase Global, Block. Coinbase was actually the first crypto exchange in the S&P 500 back in May. So this inclusion could really broaden Robinhood's investor base, boost its long-term credibility, move it further away from just that meme stock label.
That S&P 500 validation is huge, yeah. Signals a new chapter, like you said. But what have they actually been doing lately on the ground? What put them in position for this kind of, institutional nod? Looking at their performance these last few months, I did spot some positive signs. For instance, back in June, they reported preliminary Q2 results for 2025, beat analyst expectations on revenue. We saw user growth bouncing back, assets under custody hitting new highs. What's your take on that? Is it a real resurgence in retail interest, or is there more to it?
It certainly paints a compelling picture. Renewed engagement, good strategic execution. Those Q2 numbers, rebounding users, new highs in assets.
Yeah.
They aren't just figures on a page. They show Robinhood is effectively re-engaging its base and pulling in new capital. And beyond that, they've been quite busy on the product innovation front.
Like what?
Well, plans to integrate more cryptocurrencies, which makes sense given how early they were in that space.
Yeah.
And they're launching a retirement savings suite too.
Oh, okay. Trying to get stickier customers.
Exactly.
Yeah.
Both aimed at boosting customer retention, diversifying beyond just, speculative trades. And they are looking internationally, which is vital for long-term growth. They started piloting their European entry. Feedback seems positive so far. We even saw Robinhood play a pretty big role during recent market swings. Saw increased call option trading during that heavy AI stock volatility in July. Posted record trading volumes in meme and tech stocks during the August rally.
So, still benefiting from volatility.
To some extent, yes. But it's important to note, there was increased regulatory scrutiny reported around their payment for order flow practices.
Right, that old chestnut.
Yeah, that model where brokers get paid for routing orders. It hasn't led to new restrictions yet, but it's still there.
Okay, so quite a bit happening. Some positive signs, that regulatory shadow still lingering. But for investors thinking about this now, it always boils down to, what's next? Looking ahead, what should investors really be keeping an eye on? What could move the needle for Robinhood in the next few months?
Yeah, good question. There are several potential catalysts coming up fairly soon. The next 3 months, actually. First, September 25th. That's the MSFT ETF and index rebalancing event.
Okay, index stuff again.
Right. This is where major funds adjust their holdings to match index changes. It could mean significant passive fund flows into Robinhood, potentially giving the stock price some nice short-term support.
Got it.
Then, October 10th, that's their Q3 FY 2025 earnings release. Crucial look at revenue trends, user engagement, and importantly, the early impact of those new products, like the retirement suite.
See if they're actually working.
Exactly. And then November 14th, we get the 13F filings. That's when institutional investors disclose their holdings. Often signals what the quote-unquote big money is thinking about the stock.
Okay, those are the scheduled things. Anything more speculative?
Well, there are always rumors, right? We're hearing whispers of acquisition interest from some traditional brokers, maybe eyeing Robinhood's active user base, potential early crypto ETF integration. Maybe Robinhood gets to be the launch partner. That'd be a first-mover advantage.
Interesting.
There's also chatter about speeding up international expansion, maybe into Asia or Latin America, and the possible launch of AI-powered investment tools, to make the platform stickier. These are the kinds of things that, if they happen, could really juice investor interest.
That's quite a list of potential positives. Paints an optimistic picture for the near term, for sure. But, we've seen hyped stocks before that didn't have the underlying strength. Let's pull back the curtain a bit. What do the actual financials say? Is this momentum built on solid ground?
Right. Absolutely critical to look beyond the buzz. Financial health is key. So looking at their fiscal year 2024, net revenues were $2.1 billion. That's a solid jump from $1.72 billion the year before.
Okay, good growth.
Even better, for FY 2024, they reported net income of $245 million. That completely reverses the $107 million net loss from FY 2023.
Wow, that's a significant turnaround.
It is. It implies a net profit margin around 11.7% for 2024. And it's not just profit. Their balance sheet looks really strong. Cash position of $5.1 billion as of the end of 2024.
And debt.
Zero long-term debt. Plus, positive operating cash flow of $486 million in FY 2024. That's way up from $144 million the year before. These numbers, they really do show a compelling financial turnaround and a very strong balance sheet. That's definitely reassuring.
Okay, those numbers are impressive. Shows a real turnaround, like you said. A strong balance sheet. They're not just growing revenues, they're actually profitable now, and the balance sheet looks almost bulletproof. But connecting this back out, we have to look at the competition.
Absolutely. Robinhood certainly has advantages.
Yeah.
That user-friendly platform, the brand loyalty, especially with millennials and Gen Z, and their innovation like fractional shares, crypto trading, that was key early on.
Yeah.
But the market is incredibly intense now.
Yeah.
You've got the big full-service guys like Charles Schwab, Fidelity, then the app-based competitors like SoFi, Webull. Even traditional banks are boosting their digital offerings.
So that free trading thing isn't special anymore?
Exactly. The very revolution Robinhood started has now become, well, table stakes. It means Robinhood's next move has to be about something more defensible than just zero commissions.
Right.
The reality is their competitive moat, as they say, is thinning.
Right.
Competitors are copying the commission-free model. They're investing heavily in their own UI/UX, making it harder for Robinhood to stand out purely on those features.
That's a really important point about the moat thinning. A good reminder that even solid fundamentals and catalysts don't guarantee success in a crowded market. So beyond the financials and the competition, what's the stock itself doing right now? What's the general feeling out there in the investment community? Let's see, as of September 4th, 2025, Robinhood closed at $102.91. It's been trading roughly between $93 and $112 over the past month or so. Technically speaking, support seems to be around that $92, $95 level. Resistance maybe near $110, $114, and the moving averages. The stock's clearly in a strong uptrend. The 50-day average is around $98, well above the 200-day average at $87. That visually confirms that growing investor confidence, that positive momentum. The RSI Relative Strength Index is kind of high, 65-70 range, so near overbought, but maybe not extremely so yet. Analysts' sentiment seems pretty positive overall. Barclays raised their price target to $120 recently. Morgan Stanley kept an overweight rating through August and September.
Okay, constructive views there.
And insider activity. We saw the CFO, Jason Warnick, and the CBO, Stephen Quirk, had some RSUs vest in September. That's restricted stock units they earn. Shares were withheld for taxes, which is normal, but no signs of open market buying or discretionary selling detected.
Right. Standard procedure, mostly.
But social sentiment, looking online, it seems pretty mixed. Optimism about growth, yeah, but also those persistent concerns about competition we just talked about.
Okay, so with all this positive momentum, the S&P inclusion, it's crucial we flip the coin. We have to look at the potential downsides. What are the risks here?
Yeah, definitely.
Well, firstly, stock-specific risks. Robinhood still faces that elevated regulatory risk. SEC, FinHair oversight, especially around payment for order flow and their crypto offerings, which are often in a bit of a gray zone.
Still a target there.
Potentially. And their heavy reliance on options and crypto trading for revenue, that brings inherent volatility. Those markets swing wildly, often driven by retail speculation. And we can't forget past platform outages. Those pose real operational and reputational risks. Could really damage user trust if they happen again.
Yeah.
Then there are the broader market risks. The whole brokerage sector is consolidating. That puts pressure on fees and margins for everyone. And Robinhood is highly sensitive to retail trading volumes. Those are cyclical, tied to overall market sentiment. If enthusiasm cools, their business model could take a hit.
Okay, so pulling all this together, where do we land?
Right. Taking everything into account, our analysis gives Robinhood Markets an overall rating of 7 out of 10.
A 7. Okay, what's the thinking behind that?
Well, the rationale is pretty straightforward. The company is executing well on growth and profitability. That balance sheet looks great. Margins have improved. Commendable performance, really. They seem to be hitting their stride. However, the valuation looks a bit stretched, maybe somewhat rich, after this recent run-up. And those regulatory and competitive risks we discussed, they remain significant overhangs. The potential upside is definitely there if user engagement keeps up, if the new products gain traction, and if international expansion delivers strong results. They need to build on this momentum. But the downside risk could certainly materialize if trading activity slows down or if that regulatory scrutiny really intensifies.
So, investment horizon.
Given the volatility, the near-term catalysts, the sector trends, it seems perhaps better suited for short-term trading right now for those who can actively manage that kind of position. For longer-term investors, you really need to be mindful of that intensifying competition and those ongoing regulatory headwinds. They aren't going away quickly.
So what does this all mean for you, the listener? Robinhood Markets. It's a company that's clearly evolved, a long way from just being the meme stockbroker. It's now financially robust, entering a major index like the S&P 500 that's significant, yet it operates in this incredibly dynamic, highly regulated space where things are constantly changing. It's really testing their ability to adapt. Now, you might think, okay, another S&P 500 company, so what? But for Robinhood, the implications are maybe more profound. It touches everything from market cap to its very identity. So here's something to mull over. How might joining the S&P 500 actually change Robinhood's identity and maybe even its user base over time? Can that core retail-first disruptive spirit truly coexist with an increasing institutional presence and the expectations that come with it?
Absolutely. A great question to ponder. And a reminder that every investment decision really benefits from understanding the company, its market, the whole economic picture. Keep learning, keep asking questions, and definitely consider multiple viewpoints.
That's our exploration into Robinhood Markets for today. We hope this discussion gave you a clearer picture, the potential, and the pitfalls. Remember, staying informed is always key. Thanks for tuning in to Investing Talk Podcast. We'll be back soon with another exploration into the world of finance. Until then, stay curious.